So the markets are crashing. With inflation sky high and TerraLuna absolutely imploding, the stock market's crumbling, the crypto market's crumbling, everything seems like an absolute disaster. For many, it seems like the sky is falling. Stick around to the end of this video to find out what are some key levels to watch on some of our favorite cryptos, what my game plan is, and what the heck is going on. If you liked the video, smash the thumbs up button and subscribe to the channel. Thanks. Alright. It's been an absolute bloodbath these last couple weeks, and I'm sure everybody is feeling the pain. If you haven't looked at your portfolio yet over the last couple of days, I'd probably advise you not to do so. But it does look something like this. Now, for those that have been keeping along at home, the most recent inflation reading came out, and it came out at about 8.3%, just about the same as last month. However, that same number, or roughly the same number as last month, is about the highest inflation reading in 40 years. This gives the Federal Reserve the excuse to continue along the path of their 50 basis point rate hikes for the next two meetings. There could in fact be discussion of 75 to 100 basis point hikes. This of course would not be good for the market, and it's on the backdrop of the TerraLuna ecosystem absolutely imploding. Now the contagion from this ecosystem may not be felt for the next coming weeks or even months. Now for those unaware of what is going on in the TerraLuna ecosystem, a quick Google search will find you headlines like these. Essentially, and since there's many people covering this topic, I will not go too in-depth on it, but essentially, the Terra stablecoin UST lost its peg significantly, and in the process of trying to regain that peg, the price of Luna has absolutely collapsed. The fear it is causing in that ecosystem is creating a run on the bank. Essentially, everyone is losing faith in the system and is trying to cash out at the same time. That is why Luna is down about 95% and their stablecoin is sitting around 60, maybe 70 cents at the time of recording this video. Now typically an event like this wouldn't be that big of a deal, but both Terra and UST were both top 10 cryptos worth tens of billions of dollars, and both dropped out of the top 10, Luna dropping down almost to about rank 75. So what are some key levels on our favorite cryptos that we want to be keeping an eye on? First up, of course, we have Bitcoin. Now, Bitcoin is struggling to hold the line right now. It's currently sitting around $29,000 at the time of recording this video. By the time you're watching it, it could be a totally different price. However, the first level of support of interest is around $28,600. If Bitcoin cannot hold that level of support, it might take a long tumble all the way down to close to $22,000. And if for some reason it can't hold that support, it may find its way down to the 300-week moving average around $16,000. Now, of course, none of this is guaranteed. It could hold the support at 28.6, or it could have broken it by the time you're watching this and be on its way down to 22. So be on the lookout for that. On the slight bright side with Bitcoin, its monthly RSI is finally entering the green zone, which has historically marked every one of Bitcoin's macro bottoms. Now it isn't at the bottom of this green channel yet, so it still could come down some more. However, this is a good sign that we may be nearing the end. Personally, I think the bottom of this market will not come until around October or November of this year. Now this doesn't mean we're going to continue to drop rapidly until October or November. In fact, I could be wrong about the date in general, but in my theory, this doesn't mean we're going to drop rapidly. We could just a slow drip from here until then. Now let's take a look at Ethereum. For Ethereum, the first level of interest is around $1,400, $1,400. If it can't find support above there, next on the list is $1,160. Now, indicators on Ethereum look even more bearish than Bitcoin currently. There is still a ways to go before the monthly RSI gets back into the green zone. And the monthly MACD is still showing an extremely bearish cross. So Ethereum could have quite a ways to go before it reaches its bottom. Next on the list, our favorite Algorand. Now, Algorand If Bitcoin does not hold up at 28.6 and the market continues to take a tumble, Algorand of course is going to go with it and will likely go hard. The first level of support of interest is around 34 cents. From there it gets a little dicey because if we can't hold 34 cents, then our eyes are set to 22 cents. From there, we have 16 cents and 10 cents. I don't think we're going to go that low as those two, but of course I have to give the data out there, so there it is. Now, full disclosure, I have been buying because I personally think we're going to at least see some sort of relief bounce in the short term. Typically, on very, very red days, I like to be buying. And one reason I am doing so is actually because I am spotting a bearish divergence in the dollar DXY on the 4-hour chart. Now here you can see the divergence between the price and an indicator, the indicator in this case being the RSI, Relative Strength Index. Now a divergence is essentially when the price is going in one direction and an indicator is going in the opposite direction. In this case, we have the price of DXY, the dollar, going up, while we have the indicator, the RSI, going down. Now this shows weakness in the upward movement, so it's showing a bearish divergence. Now TA of course isn't 100%, but what this shows to me is that the bull run that the dollar has been on is losing steam. Now it still could continue up, just because it's losing steam does not mean it's not still on a bull run. However, I am personally placing bets that the dollar does come down over the next couple days and crypto at least has a relief bounce. Whether it comes back down after that is yet to be seen. I personally think it will, or at least move sideways for quite some time. Now here is another visualization of the dollar on a more macro level on the weekly time frame, and it shows you we're hitting historic resistance levels as well as getting into sell zones on both the RSI and the MACD. Now of course, those that watch my channel and follow me on Twitter know that the dollar is inversely correlated to crypto, or at least it has been for the last couple of years. And what that means is when the dollar goes up, generally crypto goes down, and vice versa, when the dollar goes down, crypto goes up. Of course, this rule isn't 100% as well, so, if this correlation fails in the future, it was bound to happen. However, as of right now, it has been a pretty strong correlation, and I'm willing to bet it continues. Now here I want to share some important dates so that you can be equipped with the knowledge necessary to make the right investment decisions. Because in my opinion, the most important things to be watching out for currently in this market are inflation data, what the Federal Reserve is doing with rate hikes, what the dollar is doing, and what Bitcoin is doing. If you're invested in crypto, those are the 4 most important things to pay attention to, and then start paying attention to your altcoin of choice. Typically, after I check all 4 of those things, then I check Algorand, because all 4 of those things dictate the moves of the market much more. It does me no good analyzing the chart of just Algorand if I have no idea what the broader spectrum of the market looks like. So here we have the dates for the Consumer Price Index release. This is the inflation data that gets released to the market once a month. Now, a lot of my listeners, and myself included, don't really believe these numbers. However, these numbers still exist and the market still moves based on them, so you might as well know them. Typically, they come out on the second week of each month. Next month's inflation data will come out on June 10th at 8:30 in the morning. Eastern Standard Time. Now after that, you'll want to be aware of the FOMC meetings, the Federal Reserve meetings, where they decide on the rate hikes for the market. It is also when Jerome Powell addresses the nation on his monthly address. The next meeting here is June 14th and June 15th. Typically, the rate hikes as well as Jerome speaking doesn't happen until the second day, so on the 15th, and typically it's in the evening time around 2:30 p.m. Eastern Standard Time. So be on the lookout for those because the market is in anticipation. If inflation starts to come down, that could give the Federal Reserve the excuse to start weaning back their rate hikes and move back to a 25 basis point rate hike, which would be a relief for the market. However, if the data comes in higher than expected, it just fuels the flames for more 50 to 75 basis point rate hikes, which will continue to beat down the market. There will be no all-time highs in the market for as long as we continue to have 50 basis point hikes, even 25 basis point hikes. So we need to start seeing inflation data come down so the Federal Reserve has an excuse to lift off of that rate hike gas pedal, so to speak. So what is my plan? What am I doing? I personally like to trade based on a couple indicators and the fear and greed level. My favorite indicators are the RSI and the MACD as shown before because they help indicate trend reversals, and the fear and greed index. In combination, I have found these to be very successful. Currently, the Bitcoin fear and greed index is reading at a 12. Yesterday, it was in extreme fear at 10. It has been in fear for the last month plus, really the last couple months. Now over the last year, there have only really been a handful or so of times that fear has dropped to these levels. And historically, fortune favors the bold. The wise Warren Buffett said, "Be fearful when others are greedy, and greedy only when others are fearful." Well, there is extreme fear in the market. You can sense it everywhere you look, whether it's on Twitter, whether it's on YouTube, whether it's on the fear and greed index, whether it's in your own heart and mind when you're looking at your portfolio. There is fear everywhere. Take advantage of it. Not financial advice, of course, however, this is my plan. So taking everything into account, the RSI and the MACD for trend reversals, and then the fear and greed index levels, I have created this strategy for my investments. When the fear and greed levels are between 0 and 14 in extreme fear as they are now, this is when I want to be buying the most that I can afford to buy. Reasonably, of course. This is not the time to go on margin, this is not the time to take out a loan. However, in my opinion, this is the time, if you can afford to do so, to be accumulating much more heavily than you were doing so months before. Now from 15 to 24, I double up my normal DCA. I have a weekly dollar cost average into the market that I always have, and I will keep that, but between 15 and 24, I double that dollar cost average. Now between 25 and 35, that is when my dollar cost average remains the same. It just chills. From 35 to 64, I pause my DCA and I hodl. That's all I do, is I just hold the coins. Once we get past 64 and we start getting into the greed zone, from 65 to 74, I start taking a little bit of profit. Of course, as I stated before, this is all also in conjunction with keeping an eye on the RSI and the MACD. But going forward, from 75 to 85, I start taking even more profits. And then from 86 to 100, I start taking almost all of the profits, maybe leaving only 5 to 10% of my portfolio as a moonbag. Now here is a great representation of the fear and greed index over time. As you can see, when the fear starts flashing these extreme fear levels, it doesn't instantly mark a bottom. But you can see by this graph, those that were buying in extreme fear levels in time, whether it be 2, 3, 4 months down the line or a year down the line, were the ones that made out mostly the best, because it's nearly impossible to time the exact bottom of a market. That said, those that follow me on Twitter, and you really should if you're not, may have known that I've stated numerous times that May is notoriously a bad month for investors, and as stated earlier in this video, I don't see the bottom happening until probably around November. And here in this tweet, for example, I said maybe between sometime in June to November, which is a wide gap. I'm leaning closer to November. I really don't think it'll happen too much sooner than that. But I even stated back in April that the bubble popped in November of 2021. We're going to have a slow bleed or sideways movement for another 6 to 8 months, which lines up exactly with my November thesis. And you can even go as far back into my September tweets to see I was calling for a likely top in the November 2021 timeframe. Now, of course, along the way, I got faked out as well and became bullish again, even though my macro instinct was bearish. In fact, one of my first videos I made was relatively bearish. With all that being said, I am in full accumulation mode. In all honesty, I've been buying up all of the Algorand I can get my hands on. Now, in my opinion, the bear market is not over, but is far from time to sell. The time to sell was months ago. Personally, this is the time to be dollar cost averaging into the market as heavily as you can afford to do so. As stated before, don't over leverage yourself or don't leverage yourself at all. These are not the times to do so, and don't spend money you can't afford to lose. And think long term, because prices may come down for the next 2, 3, 4 months. But if you're investing and truly investing and not day trading or gambling, then investing means having a 2, 3, 4, 5, 10-year outlook on your investments. If you don't have that outlook and you don't have that time horizon, you're not an investor. You're a day trader or a gambler, which are fine things to be, but you have to be honest with yourself on which one of those you are. With all that being said, we have a great couple of videos coming up this week on the channel. We have one coming up with Market Maker. For those that don't follow Market Maker on Twitter, you should, and that'll be on tomorrow's episode of The Next Block. And I'm lining up a handful of interviews. I've been unable to do so just being busy lately, but I will be back doing interviews very soon, and we're going to have a whole bunch of great guests on the channel. So make sure you like, make sure you subscribe to the channel. You don't want to miss any of it. And let me know down in the comments below what you're doing during this bear market, and how you're coping, or whether you're out of the market completely, whether you're buying back in, whether you're dollar cost averaging. I want to hear from you. I want to know what you're doing and even how you're doing. So let me know down in the comments below. Make sure you're subscribed, and we'll catch you in the next video. Thanks.